Most high yield income ETFs destroy their NAV over time, but these new Target 25 ETFs by YieldMax that they're just now recently releasing really have caught my interest, and I think they have some really good long-term potential. Now, there's no doubt that these single stock option income ETFs from YieldMax have a lot of problems. Not only do they have so many different single stock income ETFs that they have to manage, so their fund managers are spread out quite thin, but they're also maximizing the yield. They're not really caring about what happens to the share price or the NAV in the long run, as long as they're getting the highest distribution yields possible. For example, we can go into CONY, which is going to be the YieldMax Coinbase Option Income Strategy ETF, and it has a distribution rate of 80%. Now, a lot of these funds are going to perform quite well during bull rallies, but in flat or down markets, they seriously get crushed. And that's why I like what they're doing with these Target 25 ETFs. Now, I've made a video before going over one of my favorite ETFs by YieldMax, which is actually BIGY, which is the Target 12 Big 50 Option Income ETF. I'm a huge fan of this ETF for a number of reasons. Not only are you going to get the top 50 companies, you're a little bit diversified, but it's also going to have pretty good capital appreciation in bull markets, as well as targeting a 12% annualized yield. Nothing crazy, but when you combine the share price growth with this 12% annualized yield, you get some pretty serious returns and actually outperforms the S&P 500 in the long run. So make sure, if you haven't already, check out that video. But in this one, we're going to be going over the Target 25 Performance and Distribution ETFs. And they only have 3 of them. I hope they do release a lot more of them in the future, because I'm not a huge fan of the MSST or TEST, which is on Tesla. This one I believe is on MicroStrategy. NV, it seems like they're running out of tickers to use because so many different ETF providers are coming out with a lot of single stock income ETFs, and they're pretty much using up all the tickers. So we have some pretty unusual naming conventions here. And out of these 3, the one that I would put my money into would be NVIT, which is on NVIDIA. I'm a huge fan of the company, especially with the AI boom. The other one, Tesla and MicroStrategy, may not perform as well as you want to. It's going to be volatile and quite risky. But what exactly is a Target 25 ETF? Well, this one says it's synthetic, so it's not going to invest directly in NVIDIA, but it's also going to target a 25% annualized yield. And we do want to note, there is a disclaimer here: the annual 25% target is not a guarantee, nor does it represent a 25% yield or a 25% total return. And they have to have this disclaimer. They don't want any backlash. They don't want to get sued. And basically, they're trying to aim for a 25% annualized distribution rate, but if they don't reach it, then you can't really hold them accountable. But I think a 25% annualized target is quite reasonable, considering a lot of these other ETFs have upwards of 80, 90, 100%, which is kind of insane, and it pretty much leaves no room for growth because you're trying to get as much option income as possible and squeezing as much from those call options in order to have that high of a distribution rate. But why are you going to choose these Target 25 ETFs? Well, first of all, you're going to have design for income and growth, which is something that we want. We want something that doesn't constantly decrease in price, a depreciating asset. We want something a little bit more stable and also rallies when the overall market rallies as well. So this one is going to seek to generate consistent weekly income, which is also a nice plus. All of these are going to be weekly payers while maintaining meaningful exposure to the performance, in this case, NVIDIA. And it's going to aim to balance the pursuit of income with the potential for NAV growth over time. So there's no doubt a lot of problems with the current YieldMax ETF lineup, and they have received a lot of backlash, and they are listening to our complaints because they do want part of the market share. A lot of people have moved their money from YieldMax ETFs to other ETF providers. There's a lot of good ones out there. There's Roundhill, there's Defiance, there's some new ones like Nest Yield. So they're trying to win back a lot of investors with this new lineup by aiming to get NAV stability or NAV growth with income. And it's going to be an involved income strategy. It's going to build upon the foundation of the option income strategies by introducing a next generation approach targeting a 25% annualized distribution rate and seeking to capture more of the stock's upside potential through active option management. So we definitely have to see how these ETFs are going to perform. We're going to watch them quite closely over the next few months and see what they're actually going to be doing with these funds. Are they actually going to be good before jumping into them? Now, if you've been watching the channel, I'm not a huge fan of single stock ETFs. I probably am not going to buy this one in particular. I like the diversification or the fund of funds with some of these other ETFs like YMAX. I'm a huge fan of those ones. BIGY in particular, probably my most favorite one out of the YieldMax lineup. You're going to have 50 different companies, the top 50 companies in S&P 500 inside of that ETF. So you are getting some pretty reputable companies, nothing meme or speculative like ULTY. These are the Ultra ETFs by YieldMax. And it really has performed quite well from the year it has been out. So I am hoping that they are eventually going to expand their Target 25 ETF lineup while also providing a fund of fund ETF containing all of these Target 25 ETFs. So you don't really have to pick and choose. But that may take some time before we get to that point because they only have 3 of these ETFs so far. So they do have to come out and release with some other tickers. And of course, just like every other YieldMax ETF, we are going to have an expense ratio of 0.99%, which is not unusual for an actively managed ETF. There's a lot that goes into it, and that's pretty much the price we pay for these ETFs in order for them to trade options for us so we don't have to do that for this option income. And if we take a look at the distribution schedule for the Target 25 ETFs, which are going to be weekly paying, we are going to get our first distribution payment on December 3rd, which is going to be next week. And in order to get that distribution, you do have to buy one of those funds before the ex-dividend date, which is going to be December 2nd. Now keep in mind that this ETF has been out for a little bit now. The inception was November 17, so this first distribution may be a bit higher just because it has had more trading days in it. As we can see, this ETF has been out for about 10 or so trading days, a little bit more than 10 days. Almost 2 full weeks. So definitely don't get fooled by that first distribution. The next one, the week following, is going to have a lighter distribution. Same with the subsequent weeks. But December 3rd, that is going to be a Wednesday. So this is going to be a Wednesday weekly paying ETF. And we can see we now have 3 different groups for the weekly payers. Group 1 ETFs are going to be paying out on every single Thursday, while Group 2 pays out every single Friday, and Group 3, this new group, is going to be paying out every single Wednesday. So if you do want to build that daily dividend portfolio, now you're going to have some more options coming your way. Now I know there's not much trading history with NVIT in particular, but if we do compare it, that 10 days that it's been out, in this case it's going to be November 18 to Friday, November 28, we can actually see it's outperformed NVIDIA, the underlying. NVDA is down negative 2.40%, and NVIT, the Target 25 ETF, is going to be down only 1.28%. Now, of course, this is not much data to go off of, but it is quite interesting that the Target 25 ETF from YieldMax is actually outperforming Nvidia. Even though they are both negative, it didn't drop as much, which is something very interesting in my opinion. And that in particular is why I'm not a huge fan of single stock ETFs. You're relying on a single company. That underlying has to do well for these ETFs to do well in turn, which is why I like diversified ETFs a little bit better. And even though ULTY was quote unquote diversified, it had 15 to 30 different companies in the underlyings, but it did have a lot of meme companies. It had like Robinhood, it had Coinbase, it had Hims and Hers Health, a lot of volatile speculative stocks that a lot of people just didn't really like, and a lot of those companies it was holding just went down in price. But what's interesting now is they are actually holding some pretty nice stuff. Even though they do have Robinhood Markets at the top, you are going to have QQQ, Palantir, Meta, Coinbase. You have Gold Miners ETF, you have TMF, Broadcom, some gold shares, Alphabet, you have Bitcoin. So I'm a huge fan right now of these holdings that ULTY has. I'm not sure if they're going to have this ETF perform better in the long run. Are they switching it up? Are they moving from speculative meme companies to more stable tech-focused holdings in order to bring back this ETF? We don't really know, but we do know that in the past year, it's down 60%. And people don't want this chart. They don't want something that's constantly decreasing in value, because if you're not constantly putting more money back into ULTY, it is going to decay quite a bit. Your distributions are going to get a little bit smaller. If we take a look at the dividend history, it has paid out consistently 9 cents per share for the longest time, but recently we see it's been dropping further and further. November 5th, it dropped to 7 cents. The week after, dropped to 6 cents, and then dropped all the way to 5 cents per share end of November. So not good. People are not happy. They're looking for different style of ETFs, and that's where this Target 25 ETFs are going to come play. But in my opinion, I'm a huge fan of this one right here, BIGY. We can see it does have share price appreciation with growth. Because it's not targeting the maximum yield possible, it's going to be a modest 12%. So we're leaving room for NAV stability and NAV growth. But this is a monthly paying ETF. I wonder if they are going to switch it to a weekly paying in the future. But I think this is one of the most underrated YieldMax ETFs. Not very popular, only $16 billion assets under management, and it only trades about 14,000 shares of volume per day. So not very popular, but I think there is a lot of potential with this ETF. It has outperformed the S&P 500 since inception, and this is definitely an ETF you guys should consider if you're looking for something with more stability. I want to hear the thoughts from you guys below. Are you buying, or are you a huge fan of these Target 25 ETFs? What are your thoughts of it? Let me know in the comments down below, and thanks for watching.